Technical signals are starting to pop up and they can lead to a downside. The downside is leading towards a target that the bulls can clearly define as a bear trap, however. If you're not looking closely, this target also has a bullish name to it, and it marks a classic bullish formation that often gets played in the wrong time frame. Welcome back to the channel in this Taco Tuesday. This is ARCa, and let's dive into ticker symbol NVOS. Let's kill him. What is up, you guys, and welcome back to the channel. Let's go ahead and dive in to ticker symbol NVOS. And what we're observing here is actually the 12-hour chart where we noticed that we were in a falling wedge, right? So we were able to determine what the price action was going to be over the next 2 days from the prior analysis that we did 2 days ago, right? So we noticed here that we were preparing some type of a breakout here from the triangle, but that breakout did have some things in the way that actually had us determine the pullback here into two different zones, 122 to 125, which we got on the next day, and the following day, which came back down to the targets of 116 to 118. So we closed at that 116 bottom side that we were talking about, right? But I would like to point out that we got the test of the regression, the bottom side regression of this falling wedge, right? It is a bullish formation. Please remember that the formation has been acting a little bit weird over the last 3 to 4 months, right? So there is a slight narrative change on it, but it's still bullish. And what do I mean by that? Well, usually this triangle, or any triangle really in the in this formation family, they tend to break out at about 75. I'd say about 65 to 75% to the apex of the triangle, right? And we're currently there right now. And, as it gets closer to the apex, the invalidation becomes greater and greater. However, this is signaling a potential downside, and the downside that I would expect in order for this thing to actually consider a breakout, would break down, reacquire, and break out, right? So it's now a new complete narrative. All of these triangles are starting to do that, creating some type of liquidity trap and or bear trap, depending on the time frame that you're actually observing this. But this is actually preparing a massive, massive formation of which can be looked at as a different name, and I will disclose that in just a bit. Okay, so let's just go ahead and take a look at this formation here, because this is the 6-hour time frame. Descending broadening wedge. Sorry, getting a little bit of a brain fart there. So the descending broadening wedge is playing out the golden rule of 3, and the resistance touch is pretty nice, and we are accumulating here to get that true breakout test of number 4 and 5. Right, so if we consider the continuation of this, there might actually be a bounce or a spring that we can look for in order for us to get that move to the upside, right? So first of all, I started noticing here this trend line that we had here. This trend line is actually the trend line that we had for the inverse head and shoulders, of which, by the way, completely invalidated now. So we got to get this out of the way now, right? We were observing here the potential left shoulder, bottom head, and the shoulder down here, right? It doesn't mean that it's completely over. It just means that the single head and shoulders was done, right? So if we were to bounce from this point on, then that would be signaled as a different thing, right? So it would be a double shoulder inverse head and shoulders, right? Being like this, right? This would be the right hand shoulder and the other right hand shoulder, right? So this is something as well, but I am not sure that this is actually going to validate, as I think that there could be a more powerful bullish formation if we do face a downside here. Okay, team, so I'm going to go ahead and start to disclose that potential, right? So first of all, I started to notice this using the neckline from that inverse head and shoulders. I extended it to the left, and I noticed that we were coming up to a very curious touch up there, right? So if we go ahead and just remove some of these drawings here, right? So let me just go ahead and do this and get this out of the way, right? So something like this, you know what? I can just go ahead and group this and call this edit 1, right? Or you know what? We can just leave it grouped like that for now. So we can go ahead and get rid of all of this stuff. There we go. And now create a whole new set of drawings, right? So let's go ahead and do that now. So I'm gonna get the channel tool here and see if we can actually draw something a little bit more interesting here. So I'm going to use 2 different methods here, right? So this being one of them. I know that we can actually get some resistance touches there, but honestly, this FOMO candle here, I believe we can ignore and actually spark a different type of imagination using this trend line instead, right? So yeah, very nice contact points there. I do think that this is looking like it could be something here, right? And it may introduce a different set of conditions for a potential breakout. And I think this would also display the absolute potential bottom too. I don't know if, I mean, it's hard to call the floor in some cases here, but yeah, what we are observing here could be a descending channel, and the descending channel is a different type of bullish formation, and it still matches really well with the other broadening wedge, right, which would be this one right over here, right? So in other words, this would then be considered a different type of buy formation breakout. So, but the only thing here is that if we were to consider a continuation to the downside here, then there is a potential for us to come back down to test this 104 area before a continuation to the upside. And I will tell you why that is. Okay, first of all, we are completely getting rejected here at this critical area of resistance, right? So let me just bear with me here, okay? I need you to pay close attention, because this is critical for price action, and it is critical for the position in which we're currently sitting in, right? So this area here, we're bouncing in and out of, right? Critical resistance, and we're not getting that success. So that means that we're probably going to get a downside here, and there's already a signal to give us that potential downside. What is that? Buy daily time frame, bearish engulfing, closed today. So this actually already tells us a warning is coming in, right? A warning to the downside is coming in, but this is what we in fact want, though. We want to be taken to the downside here to observe a different type of bullish formation. Okay, so now if we look at the upper time frames, even if we actually, you know what, even in a 12-hour, we can observe this, right? Let me get rid of the moving averages here, and also let's go ahead and get rid of all of these lines, and we'll go ahead and do that group again, right? And we'll remember to call this the group one or whatever, right? So like in this case now, let me get rid of this. Oh, you know what? Actually, yeah, we can keep this because that is the critical resistance that we're currently observing, right? So, yeah. So, all right. I want you to see the price action coming down like this, bouncing crazy like this, and now coming back down like this, right? So when you're observing this, these are 12-hour candles, right? So if we're going to knock out, if we're about to knock out, I know you're probably ahead of me already. If you know, you know, right? So right down there, let's just assume that we would come back down tomorrow, right? So right here. So this would be the trend line to actually get 104, right? To actually acquire. If this is what we're doing here in a weekly time frame, this is called a double bottom. Okay, this is a massive time frame and a massive signal for a continuation to the upside. And by the way, this is what I mean by this potentially being that bear trap. Okay, so as soon as price action starts coming down into this area here, there's going to be the potential of a fake out. Okay, that fake out has a $1 target and also a range low. Right, so this is actually from back here. This is the low from November 7th, 2023. Right, so there is that range for us to observe. Now we have to catalog that range, right? Just like this, 104 to $1 bottom, just like that. We are looking for a bounce from that zone into this area. So we get that bounce to the upside. Two areas that we can find potential resistance from, right? It's going to be around 108 to around 111. Pull back, start validating the 104 to $1 as the valid area of support before a continuation to the upside, and then we could continue onwards and upwards. Okay, so that now is still considering a tri-formation, a breakout, a bullish tri-formation, right? So we have the descending channel, we have the broadening wedge, and also the double bottom, right? So that is all in play right now, and still a potential for a continuation to the upside. Okay, so what I will say is that in the this is the historical volatility versus momentum, stochastic momentum backtest. Is it actually this chart? I'm sorry, it could be this chart right over here. Right. Oh yeah, yeah. So in a 3-day time frame, yeah, this is what it's looking like for a double bottom right over here too. Right. Not even to signal that it could also be a double bottom if we focused on the lows of November 7th, 2023 too. Yeah, that's also a potential too. Nice. So yeah, it could be a double bottom in 2 different time frames. Very, very interesting, by the way. So yeah, this is the statistical back test where we took into consideration the positioning of volatility here in critical expansion when it starts to contract here, paired with a potential upside of the 3-day time frame stochastic momentum. By the way, it is to be closed. This candle here is to be closed. The last candle that we're on right now, right, is to be closed on the daily time frame. Actually, I'm sorry, in 1 day in 18 hours. Just take it like that, right? So 1 day in 18 hours. Today is Tuesday. That should be about Thursday. That should be about Thursday market close. So at Thursday market close into Friday, we're going to be able to see what price action did to stochastic momentum and volatility. What we want to see is a continuation of contraction here, right, with volatility, and an absolute shift of stochastic momentum to an upside, right? So if we can get this pivoted to the upside and we can get this thing to continue contracting here, then the data set here, or the samples that we calculated into this data set, will start to apply. So that first upside move, based on the criteria that we just spoke of, there are 24 total iterations throughout the entire trading history of the asset. Here are all my samples, right? So 18 of those have been guessed correctly to the upside. So that's a 75% upside accuracy. That minimum, the mean here is a move to the upside of 175.54% over the span of about 26.17 days. This is on average. It's, it doesn't always happen like this, but from the moment that it fires, which could potentially be Thursday into Friday, that actually would mark off a ticker, right? 26 days later, then within that time frame, we could get a massive upside. But please remember, these are statistics and they are not certainties, but they do measure some type of behavioral anomalies here, right? So something could be happening within the company that we don't know. I personally do not know anything of the fundamentals of the company. I do not follow fundamentals. I follow volatility, behavior. I follow statistics and physics, right? So this is exactly what I'm looking for here. We are looking at a 68% of the standard distribution curve of 175 percent to the upside, right? So we've already touched down on some of those targets, by the way. So let's just say that we did fire this thing off at around $1 and let's say 30 cents, right? So $1.30, this thing fires off 175% to the upside. That would actually lead price action to, let's see, that would be approximately, very hard to get it there, approximately $3.61, marking off resistance here from the top side of about, still November 2023. The highs of around that time, and also the resistance levels that we faced upon this large capitulation here that we had back in October of 2022. That resistance range is located at around 340. So very curious that it would suggest for us to come and resist around that area there. So very nice. Okay, now what's cool here is that I've also calculated the standard deviation from the mean. Standard deviation is leading to a 190% move to the upside. And that also can be figured into the price, right? So 190 is not going to change too much, but absolutely take into consideration that it would be 385. Now, I also calculated the upper bound and the lower bound of the first standard deviation, second and third, right? So you can see here that these are massive targets, right? I'm talking about a 366% move at the upper bound of the first standard deviation. That is absolutely huge. Something like that, a move of that gravity would actually take price action here into the $6 range. Let's just go ahead and just, we can speculate all we want here, right? It doesn't mean that it's going to happen. We're just going to speculate a little bit. Let's just say that we did reach the upper bound of the third standard deviation, right? That third standard deviation is leading to a 747.22% move to the upside. And let's just see. So that would be around here. That would be valuating the asset at $10.69 upon this breakout, right? So it depends on the potency of whatever could be happening here within the internals of the company, right? So if they do have some massive catalyst or something, then there are 3 potentials here, or 4 potentials for us to observe. So I want you to remember that these are just probabilities. They are certainly not certainties, right? And just, you need to take them as such. Now, positioning ourselves, that could actually introduce some intricacies here. If you are a long-term investor, investment strategies really don't matter whether you're going to catch an entry at 116 or 104. Right, so meaning if you're going to hold this for 1 year, 2 year plus, 3 year plus, a long-term investor, then yeah, these numbers don't really matter, right? Because if this company really does push to the upside here, $10, $11, $12 compared to the $1.04 to $1.16, really is just a micro difference. It won't make a difference, right? because yeah. So now you know kind of my perspective behind this, right? So if we were to favor the upside target from this shorter term time frame channel, right? Let's just say that we were to break out here somewhere, right? That would be $1.73. And what's very curious is that the take profit target from the broadening wedge is absolutely located at 172. What do you know? Right? So very curious that both of the formations are leading to a similar target here. And also, please remember that we did have a Fibonacci retracement located right up there, and that was the one spot 272 at 169, matching very well to the target that we're looking at here. Mathematics, psychology, and statistics. Well, yeah, you know what I mean. They're all kind of matching pretty nicely here. Please remember to reserve your seat at the ARCmasters course at gmail.com, right, team? So I am teaching my last ever 16-week mentorship program, right? This is going to be the last time I do it. Track 3 students started about 4 weeks ago. They're doing marvelous, and yeah, we have a good grade point average, right, overall. But please remember that this is the last one I will ever teach, so make sure to get in touch with me as soon as you can before it's too late. Let's get a good start to this 2024 year. Right, team? So that's, yeah, I'm looking for a pullback here, team, potentially into that area about 104 to $1. Start chopping around here. Validate that 104 into the upside. Get that resistance of around 127 potentially into next week sometime. Pull back here into 115 and start the breakout process, right? So let's see what's up, and we shall keep our eyes on the play here, okay, team? Please always respect the markets and always respect your risk. All right, team? So please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, never, never. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well a very, very good night, and I will catch you at the bell mañana. Adios. Yeah.